Muy bien, Jan, si quiere puede abrir su cámara. Yo le envío el aire cuando estamos listos. Muchas gracias. Muy bien, en este momento vamos al aire. Buena ponencia. Gracias.
Buenos días y muchas gracias.
Good morning. Thank you very much for joining us for today's webinar. I'm Gianleo Frisari, Senior Climate Change Economist at the IDB at the Finance and Markets Division. We work on sustainable finance in the region, ranging capital markets, from capital markets to financial institutions. Thank you very much for joining us today. Before getting into the housekeeping details, let me say that the webinar is being conducted in Spanish, but simultaneous interpretation into English is available. In order to listen to your preferred language, you can click on the globe icon and select your desired language. The Q&A option is available, and you can include your questions for the panelists and presenters. You can click then on the Q&A icon in the lower part of your screen. The publication that gives rise to this webinar is the LAC State of the Market Report, and you will find that on our web page and on the Climate Bonds Initiative web page as well. The webinar is being recorded, and you will also find it on the same web pages in a few days' time. The purpose of today's webinar is to provide an update on the sustainable finance market in the region, including considerations on the maturity of markets, the profile of investors, and the state of transparency in the markets. We will have a presentation with Valeria Daniel Contreras, who will show that sustainable finance markets have grown a lot in recent years. And if we look at the global context, growth is still very unequal across countries, and there's still a lot of work to be done in order to harness the full potential of the region. In our exchanges with the panelists, we look at the role of institutions in markets, looking at regulation, international institutions, development banking, and how it can support market growth and transparency. We'll look at the position of domestic and international institutional investors in the region, and we'll look at transparency, market standards, and certifications, among other different matters. And on the agenda now, we'll introduce our colleagues today. I will ask them to please turn on their cameras so we can see them. We will start with a presentation by Valeria Danilo Contreras on sustainable finance and the state of the market. Valeria is an analyst at the Latin American program of the Climate Bonds Initiative. She's based in Mexico and collaborates in the green finance programs across the region through technical assistance, training, capacity building, and also through communication, webcasts, podcasts, and others. After that, we'll have a discussion with some great panelists, Isabel Braley, a senior financial market specialist at the IDB. She works on sustainable finance market development in LAC. Also, Janine Dow, Senior Sustainable Finance Director at Fitch Ratings. She will also talk about trends in the thematic bonds market in LAC. And we will also have Eduardo Ateortua, the head of LATAM, Principles of Responsible Investment, PRI. He is responsible for strategies and priority sectors for investors and trends. And again, remember, you can send your questions using the Q&A function. And without further ado, I will now give the floor to Valeria for her presentation. Thank you. Thank you very much, Gianleo and team, for this webinar we are holding today. I will now share my screen to provide a brief presentation on the results of the report we prepared in collaboration with the Climate Bonds Initiative and support of the IDB and IFC. We can now begin to present some of the results regarding what you will be able to find in the report that Gianleo mentioned. We'll be providing the links in a few minutes as well. So as to get an idea of the state of the report, green bond issuances, social, green and sustainable bond issues have increased exponentially in recent years. Since the last time we had a report on the state of the market in Latin America and the Caribbean, issuances have more than doubled, both for greens and for social and sustainable. The main markets in the region are, of course, Chile, Brazil, and Mexico, with figures between $17 billion and up to almost between 8 and 18 billion dollars, but the figures will continue to grow in the next few years, and we can see that green issues continue to lead the process relative to social and sustainable, but we can see more and more issuers, we can see more countries that have also joined the sustainable finance market, and we can also see diversification in terms of currencies with different sectors financing this. We'll look at some of the details. Green issuance reached $48.6 billion in the whole region. And year on year, we see records for sustainable finance markets. And here we can see the figures for the first half of 2021, the main markets being Chile, Brazil, and Mexico. But we also see new countries that have joined the list. In 2021, we see Barbados, Bermudas, Ecuador, and Panama. And we can also see an increasing diversification in terms of who the issuers are. Financial corporates and sovereign issues are very important to account for the growth in this market. And on the next slide, we'll see a little more about the diversification in the investors across countries. In the orange column, we can see how Chile has spearheaded the green finance market as regards sovereign bonds. But this is not the same across all countries. We can see corporates or non-financial businesses that are leading in other countries like Brazil, Panama, Barbados, Uruguay. And we have countries that have shown higher diversification as far as the issuers are concerned, such as Mexico, which has 5 different types of issuers. If you look at local governments, development banks, financial corporates, and this varies from country to country, especially due to the development of market conditions. Also, the policies and legal frameworks, the state of the markets in the individual countries at any given time, which have a bearing on the results. So this as regards green funds, energy is still the most highly financed sector in the region and in the world, with over 44% of the cumulative amount, but other sectors are not far behind. We have transport, driven in Chile, for instance, by sovereigns and electromobility, standing at 28% already. And we have other sectors such as land use, which is very important for the region and offers huge growth potential. Land use includes sustainable agriculture, forestries, and land protection. And the figure here is 12% of the market in terms of the use of funds. This is a little different according to the country and issue type. For instance, the public sector has been leaning more towards energy, but in the private sector, it is a little different, as we have seen transport, land use, waste management, and other sectors like industry and construction, which have figured quite prominently in the private sector. The report has also shown preferences as regards issues. What kinds of external reviews have been mostly used and what is most appealing to investors. We can also see the size of issuances. Some prefer smaller issuances and external reviews. This is for green bonds and debt, but we can see some general tips as to what the green, social, and sustainable bonds are. Here you can see the strength of social and sustainable bonds and how the market has been diversifying. And this is a process that has been driven in each of the countries. 2021 debt in terms of social and green bonds has more than doubled. And this is just for the first half of last year, with the year ending with much higher figures. And here we can see not just green bonds, but also social and sustainable bonds growing, with the markets also diversifying. And this is very important, as we will see during our discussion panel. We'll see why this is happening and what we can expect in the next few years. On the next slide, you will see some more detail as to the diversification for social and sustainable issues. Clearly, we can see that this has been driven by sovereigns. Chile has supported this very much through its sovereign bonds. The ministries of finance and the treasury have been issuing these bonds for the country, and they have also encouraged the social and sustainable component as well, not just the green bonds. And we can see this in the case of Mexico with its sovereign bonds, or the social and sustainable bonds issued by Ecuador and Peru and Guatemala. So these issuances have been very important in terms of developing the market. And one more thing, here you can see a general description of the market in the Andean countries, Ecuador, Chile, Peru, Colombia, which are not lagging behind. Social, green, and sustainable bonds continue to grow. And we should also note that in 2021, we had green issuances from Colombia and sovereign sustainable bonds in Peru. And that's one of the trends the report shows for the region, in addition to other trends that have been gaining ground, such as sustainability-linked bonds. And we have the pioneering countries, the largest markets in the region, Brazil, Mexico, and Chile, but other countries are also working hard on encouraging these debt issuances, as well as transition bonds, which have especially gained traction for the greenhouse gas producers to help them change their strategies and projects and shift towards more sustainable and cleaner infrastructure. This has been encouraged in Latin America and in other regions. And we would be remiss in not mentioning the development of taxonomies. We have seen taxonomies developing in Latin America, whether green or sustainable. For example, in Colombia, the Dominican Republic, Mexico, and Chile. And this is important because countries are starting to work on their own metrics and definitions, in addition to them being in line with international taxonomy trends. So with that, I would now like to move on to our panel. I will stop sharing my screen. I was saying I'd like to move on to the panel to see what it is our experts see in our region. I would like to start with Isabel. Isabel, are you there? I would like to start talking a bit more about what we're getting to see in the market and what the trends for Latin America and the Caribbean are. So, Isabel, since we talked about taxonomies and green taxonomies, national taxonomies and sustainable taxonomies, what do you think is the intention of countries in terms of supporting ongoing development in the region through taxonomies? Good morning, and thank you for the invitation. Based on what we've seen in the 5, 6, 7 years of supporting sustainable bond markets in the LAC region, developing taxonomies is crucial to raise the standard in markets, which grow very much and very fast, especially in emerging markets. And so if we want to keep quality standards and mitigate the greenwashing risk, we need taxonomies and we need domestic regulator engagement. And that's precisely what's happening. As you noted, there are already 4 or 5 countries in the region developing taxonomies already, and regulators are developing to issue thematic bonds, and this also greatly supports market development. This is why at the IDB we are supporting many of these initiatives. We think that is highly effective in order to develop the domestic market, which happens to be one of our mandates. What I just wanted to say is that when developing such taxonomies, it is very important to engage all stakeholders. In Colombia, for instance, this was a process. I think it is now being completed. It was an iterative process with the whole community in order to develop taxonomies. We worked in the water sector, and the businesses that we worked with were very active in providing feedback for the taxonomies. Now, what I would like to say here, I know it's very much related to what Sean Kinney says, the CEO. We need an alignment. We can't have a market in which each country, each region has its own taxonomy. We need common ground. It is obviously to be expected that taxonomies will have their own specificities, but they need to be duly identified and justified, because ultimately what we must remember is that the taxonomy that prevails is the one of the investor that will purchase a bond. So if we develop taxonomies that are significantly, that's a mouthful, isn't it? Significantly different to the taxonomy applied by the investor, we are carving out a whole component. For example, if Colombia develops a taxonomy that is completely different to the European one, it will be very complicated for European investors to buy Colombian bonds. So we do need common ground. That is particularly important because, this must be said, in Latin America, domestic markets don't yet have the depth they need to absorb the full potential of thematic issuances that the region has. So we need access to international markets, and we need this alignment as far as the taxonomies are concerned. Absolutely, you're 100% right, Isabel, and that is also very important to protect market credibility in the region. We need to have this agreement and common ground as regards the taxonomies, and we are growing and diversifying the region's market. And what else do you think is especially important to keep the momentum in the increase in sustainable finance and in market growth in the region without foregoing credibility? What we see, and this doesn't apply just to our region, it is a global thing. We are entering a new phase because the low-hanging fruits, the easier issuances of investors who already had international market access, who had large issuances in easy sectors like renewable energy, or those who had investment grade or around investment grade, all those investments have been made already. So if we want to develop these markets even further, we now need to move up to more complicated stuff, which offers more potential, but will be more complicated. New sectors, such as water and sanitation. Well, transport is almost mature, but waste land use, which is so important for our region. Smaller issuers with smaller scale issuances in local currency. We also need to support issuers who've never issued debt. We're getting to see that now in the water market in Colombia, for instance. So we'll get to a phase that will not be as easy. And this is why we will need structures in order to be able to take the new issuances to what the investors actually need. So ways to improve credit risk guarantees. Currency risk hedging instruments, also mechanisms for the small issues to be aggregated and to be able to be harnessed by international investors using the size they need. This will help develop the market while at the same time preserving the quality standards we're aiming at. Because if we just move on to the next phase without thinking it through carefully, without keeping the standards, we'll lower the standards and quality of the market. And that's a very important factor. You're absolutely right. And it is important to put in place those structures so as to be able to further develop the market in the region. And since you mentioned the sectors that we need to continue expanding as part of this phase, as we saw in the charts, well, there's energy, an example of low-hanging fruit. There it's easy to see what is green and what is not. And since you mentioned transport, for instance, which is a sector that we need to foster, there's a major infrastructure gap. There's a lot of infrastructure that is lacking in the region. So how can we continue to foster these kinds of sectors? You talked about the importance of guarantees to be able to reach out to smaller investors and give them opportunities. So how can we continue to grow those sectors? Well, transport is a great example. In the region, there's a bias as far as Chilean issuances are concerned. Well, transport, 28% of issuances, but it's the Chilean green bond. It's so large that it creates a certain bias as regards the figures. But it's true that if you give me the Chilean green bonds, a major component of that is the metro, clean transport. So I think there's huge potential in that sector. In all other countries, the use of that hasn't yet begun. And if you look at all countries and their NDCs, they have a focus on transport, which I think will be a very important share for countries to align to the Paris Agreement. So the green bonds are a super efficient instrument for clean transport. We have the taxonomies, there are no discussions there. We have the standards already put in place. The thing is that large infrastructure and transport projects often involve sovereign local governments, municipalities, or other actors that do not yet have very easy access to the capital market. So we need to work on that. I think for this particular sector, not necessarily for others, for this sector, the issuer side is important. Work needs to be done with them to see how they can take advantage of the bonds as instruments. Absolutely, you're quite right. Often, the graphs fail to show exactly the situation in other countries. You know, if you look at the number of issues, this sector is very important, but in certain countries. So we need to encourage development in other smaller countries where transport hasn't really been tackled as much as it should be. But that doesn't apply only to transport. We also see questions from our audience, and they talk about agribusiness and the whole land use sector. So again, it's a sector that offers a lot of potential in Latin America as it's so important for the region. And how do you think we could also approach that sector in the region? The audience are right. In our region, the issue is land use. And in that sector, it's not that easy yet. Brazil has made significant strides in terms of the use of bonds in relation to land use, but we still have a way to go as regards methodologies, standards, and the aggregation level will need in that regard will be even greater. As the projects may be really small, we may have a lot of them with a very large ultimate impact. But that's an issue in that sector. It's a crucial sector, but we don't yet have all of the key elements to really jumpstart that sector. And that'll be precisely a focus for us this year. Great. And it is also crucial to consider the role of all the different stakeholders, the actors that need to be engaged in order to encourage these investments and issuances. As you noted, the central banks, financial regulators that have a key role to play in climate action and also in supporting the sustainable finance markets. How do you think we could further support central banks and financial regulators in order to really demonstrate the benefits? It's true that the role of regulators and central banks is crucial because they encourage or discourage markets, but their role can take on very many different forms according to the countries and country features. First, we need to ensure that the markets are efficient, transparent. So one first role will have to do with developing taxonomies, transparency rules, also communication, disclosure rules, and reporting. Because at the end of the day, the sustainable bonds markets have to do with impact commitment reports. So regulators have a great role to play in defining the reporting requirements. In markets in which the cost of issuance may prove challenging, there's a role in terms of looking at that and proposing direct incentives to ensure that it's easier to issue, less costly. I mean, to issue in the right way with good quality. And they could also think about ways to help support the verification and reporting costs, help defray those costs. And in markets in which sustainable finance have an important role to play in mitigating financial sector systemic risk in countries that have a lot of stranded assets. This has been done in other regions. The central bank may play an important role providing incentives through collateral or through investors so that green or sustainable bonds will be much more interesting, much more appealing than others. So that's another role. But I think the crucial role is, of course, very much related to the individual situation of each country. In our region, the IDB, of course, naturally has relations with the central banks and regulators. I think they have already been working on many of these things, but they're highly sensitive issues and they're complex, so they take time. But I think we are making good progress in the region on these matters.
I fully agree, Isabel. I think that the role of central banks, regulators, financial regulators are very important, but that's not all. So now I would like to talk about a very important actor in sustainable finance that we see. And here we're talking about the investors. The investors are the key to support these investments. And as you were saying at the beginning, in the end, these are the people who are interested in these standards, this guidance, in order to understand what it is that we are financing. Now I'd like to talk to the panel. Thank you so much, Isabel. And I'm going to ask the next question to Eduardo. We're talking about investors and what the key factors are here. Eduardo, I'd like to ask you, how do you see that investors and sustainable investments can support the economic recovery in that region? Hello, everyone. It's such a pleasure to be with you. Thank you so much for the invitation in order to be able to share these thoughts and how it is that we are aiding in responsible investment in order to have a greener and more sustainable economy. In terms of your question, I'd like to say the following. After about 2 years from the beginning of the pandemic and the global conversations that we've had on the importance of a green recovery, what we see is that it's not that easy. And today, we see that we're mentioning the importance of the green investments and taking into consideration the political and social juncture and the conflict in Ukraine. So I think that green recovery, especially in Latin America, is a very complex topic, and it has to do with the following. We have to understand that regions such as Latin America have to progress. They have to go through a process of transition, and this we consider to be very important. But for instance, we, PRI, with our signatories, we want to be sure that we promote the concept of a just and equitable transition, because we believe that this is the way in Latin America. We can't forget the social impact that this transition has and will have, understanding that Latin American economies depend on these sectors. So transition has to be done this way, and we have to advance toward a more green economy, being aware of the social impact that we have to understand and we have to monitor. Of course, the investors have a very important role in this sense. Now, if we talk about the reactivation of the green economy, the invitation is to develop more projects and financial instruments such as green bonds in order to see more investment opportunities in Latin America, renewable energies, a sustainable construction, circular economy, and efficient use of water, agribusiness. all of these are topics that are part of the conversations that I have daily with our signatories and with the people that are part of the investment funds. They're interested in all this and in this type of project. So the task here is to continue generating an ecosystem that promotes, that motivates all of this based on what was mentioned earlier. We're talking about clear taxonomies, about novel instruments that can hedge risk for that type of project. We have to follow that pathway, but at the same time, we have to find a balance between making sure that we understand the projects, that we are betting on these projects, but at the same time understanding that in Latin America and the world in general, we have to be aware of the fact that we have to have an equitable transition. We see this in some of the regions, countries. We have very complex junctures at a political level and short-term views that make it difficult to have this green recovery. So I believe that the concept of an equitable transition is very important in order to promote the reactivation of resources in Latin America. Yes, of course, this is very important indeed, Eduardo. And you mentioned the equitable transition in our region. We see quite a number of taxonomies, and we see sustainable sovereign issuances. We're talking about the social and the green aspects. What you just mentioned is very important. The interest is there. The investors do want to invest in this. But what is lacking is the next part. That is to say, supply and demand. We have to make sure that the projects are there, that investors do want to invest in this region. They want to invest in green and sustainable and social. But how is it that we can support the issuers? What is it that we can do in order to support the vision of the investors? How is it that we're going to grow supporting the issuers in order to be able to satisfy the investors' demands? I believe that all kinds of organizations that support a good structuring of instruments that facilitate investment for the investor who wants to use his or her capital is important. With the presentation of this session, we see the situation in the various markets, and therefore we have to make this known. We have to make these examples known. And in the end, and I'm saying this from the experience that we have in Latin America, in our region, we understand and we learn more from others. We see how others do things, that this is something that works, and this doesn't happen solely in developed markets. So in events such as this, we see that we're trying to find the instruments that are issued both by the public and the private sector in order to promote access to them by investors. So this is truly very important, and I do believe that this is the road ahead. Organizations such as ours have the task of educating institutional investors in Latin America for them to understand the importance of having in their portfolios all kinds of sustainable instruments. That is our work. That is our task. We are trying to do that. We have to try to modify the way many of the investors think, of directors, financial directors think. So it's a cultural change, but I want to say that this is something possible. It's something that we can achieve. And then today we have people that are totally committed in our communities. It's a greater part of their portfolio is invested in sustainable instruments. So this is there, but it's important that all of those instruments that already exist become more and more visible. And this is how I think that we can motivate the creation of new investments over the years. Yes, Eduardo, you were talking about education of the market. This is very important indeed. We have to take all of these factors in the field of decision making. Another thing we see in the evolution of the market are the EAG factors. We talk about this and ISG, which is the involvement of environmental government involvement in institutional investors. So what does the market look like in the next few years, taking all of these ESG decision-making instruments? There are two things to be said about the question that you asked. First of all, we have to say that the ESG or ASG sector factors are very important for investors for a number of reasons. First of all, we see many investors who realize that the ASG analysis for the performance in a fund, in a company, nowadays is much more strategic. So what we're going to see is that we will have more investors who are seeking to analyze all that to make better investment decisions. And there's also very high demand in the market, and we see this particularly with the investors, institutional investors, in particular with the pension funds in Latin America. So here again, we have another great opportunity, and no doubt regulation in countries such as Brazil, Mexico, Chile, Colombia, Costa Rica, Peru. We know that in Peru, there are regulation expectations for investors. All of that is going to change the narration, the conversation amongst investors, because somehow we could say perhaps that in those markets that I just mentioned, integrating ESG criteria will be a reality. And this is what we see in our organization and what we will see in the next few years with the consolidation of these factors by the investors. Yes, this is quite interesting because this is a topic that is quite novel, but at the same time, I believe that it has to be taken into account more and more. All of the investors, the companies are including all this in their investments from the private as well as the public sector. Regulation is extremely important, no doubt. Now, changing the subject, we have another sector or another topic where we see investments, especially in this region, which is climatic resilience. We know that this is a region which is highly vulnerable to climate change, for very extreme meteorological events. What can we do for our investors invest mostly in climatic resilience? Yes, I think that this is what the $1 million question. I believe that it's unfortunately very difficult to answer because I don't believe that there are enough elements to motivate a private investor to invest his or her money in climate resilience. And this is something that is quite worrisome because, as you rightly said, our region in particular is not guilty of the climate change that we are experiencing. Let's say that historically, it's not truly our fault that we see the situation of extreme climate change. But yes, of course, we are in a geographic location where we will continue to live the consequences of global warming in our planet. So I don't believe that there is a single answer. Unfortunately, I don't have an answer, but we have to see what climate funds are doing. They're trying to develop finance models between the private and public sector in order to promote the green development of projects that are related to climatic resiliency. So I don't think that this is easy to do. When I talk to investors, I have to be completely transparent. When we talk about the investors who are part of PRI, it's very complex to convince them to invest in climate change mitigation projects, which in theory today should be easier to find and have good earnings, which are profits that are related to these projects. So we're working on educating them. Working and investing in climate resiliency is very important for a responsible investor. Convincing them to invest in climate resiliency, I think, is a task that will take much longer because the returns on these projects are not that clear. In the end, the investor needs to be able to continue with the fiduciary responsibilities that he or she has. So this is very important, and we have to continue to look for innovative instruments to do that. And in particular, in this sense, whatever can be negotiated at COP27 in Egypt is fundamental, because this is one of the mainstays of the agenda. We have to take into account the concept of economic losses due to the fact that countries in development are the ones that are subject to the consequences of climate change. How is it that they can receive money in order to have greater resiliency in the social context in the country itself? So I believe that we have to see what will happen in COP27 based on that very important topic. Yes, that is true. I think that what you're saying is extremely important due to the fact that we don't see the returns that are that clear in terms of climate resiliency. Long term, if you invest in climate resiliency and having clear standards, having these investments will take us to a better long-term return situation. So we have to educate the issuers, the investors, a number of actors to understand what climate resiliency is and how can we approach it. In and of itself, it's been a huge job on the part of all of our institutions, having them understand, having actors understand what mitigation is indeed. And now we have to make clear what resiliency and adaptation to climate change means. If I may, I was thinking of something else based on the juncture where we find ourselves with the war in Ukraine, is that everything seemed to point that vis-a-vis the energy crisis that we are living, and we have institutional repercussions in the world over. There's a stronger message, which is based on the need to use fossil fuels wherever, however, in order to be able to fill the gaps that the Russian market is going to leave short midterm. So I believe that this is something that is going to create a risk on the short-term goals, the decisions in Europe to use more coal, to use energy. This is something that we are seeing. And so in this decade, it will be difficult to reach the reduction goals that we had set recently. And I want to say this is today's juncture. And of course, it's very difficult to fathom what will happen. I mean, if the scientific information in the model of emissions is something that is difficult to compute. Going back to your question on climate change, the trajectory of emissions that we will probably see due to this conflict in the next few years will lead us to see that there will be greater extreme climatic conditions. We will see a stronger climatic change, particularly in a region such as us in the next few years, because we will not be able to reduce emissions. So we have to invest more in this field. So these people, they're saying we need coal, we need oil. Of course, all of those gains that we might obtain over the next few months and years due to the high prices. We have to have this conversation. What part of that income is going to be used to manage this kind of project? Because climate change is not going to worry about an armed conflict. It exists, it's there. So today's juncture will highlight resiliency. We're not going to reach the goals, then let's prepare the conditions that are necessary, because climatic conditions are going to be increasingly more complex. I agree with you. And we also have to bring about more drastic changes. Climate resiliency is very important, particularly with the factors that we see internationally. As you were saying, climate change is not going to look at wars. It'll be greater. It'll be affected by all of the factors that we see globally. Thank you so much for pointing this out. And now I'd like to ask Janine if she'd like to come in. You have worked on this market, you see the market trends, and because of the fact that we're talking about resiliency, about adaptation, where is the market going to, and how is it that it's changing? How have you seen the change? How has it changed, and how do you see the market in the coming years? Thank you. Thank you so much. First of all, thank you for the invitation. It's truly a pleasure to be here with all of you. It's a privilege for Fitch Ratings. Thank you so much. I think, Valeria, that we've spoken quite a bit about the market. The study that you undertook is quite exhaustive. It contains quite a bit of information. I would add that this market, in spite of the fact that the new green bond was issued by the European Investment Bank in 2007, I have to say that this is still a recent market. So when we talk about how do we see development, how has it changed, I think that we are in a type of asset and debt that is very young. Talking about a trajectory and changes is also very difficult. What I'd like to point out is that what we see in the GSS bonds market, as we call them, you call them VSS, these bonds for us in Latin America, we see that the trends in the market actually follow global trends. They go hand in hand. Why? Because the market is young and it hasn't been that long. We don't have all these decades in which to say, well, here we have made progress, we've made headway, but here we haven't. So at this point, we see that the growth is quite strong, and I am fully in agreement, because what we see on a global scale, which has been the doubling of issuance of GSS bonds between 2020 globally and 2021. I have figures that go up to $600 billion globally in 2020 and $1 trillion and a little over that in 2021. It has almost doubled completely. So we see the same happening in Latin America. This in markets where we already saw this doubling between 2019 and 2020. So we believe that this is a straight line. Another important trend is that we are looking at an immediate look at the regulators, not only in Latin America. We're not talking about the market regulators are more advanced or less advanced than in other countries. We see that they are walking hand in hand with this. So these are the great similarities. If we have to think about regional differences, and I think that all of the other panelists have mentioned this, but we work with different figures, I believe. We do see this. We see that in Latin America, perhaps it's somewhat less a matter of sustainable bonds that are issued as opposed to the green bonds that represent a little over 50% of total issuance. Here we see more the social part and the sustainable sector. Due to the sector, due to the volume of the market, obviously, if there are very great issues as happened in Chile, obviously there will be a mix that isn't that representative, I believe. But we do believe that social bonds will be very important because there's still much to be done in the social sphere in the region. And we also see a preponderance of the sovereign issuers. We see that there's a nexus, there's a connection between what needs to be done socially in what sectors and in what areas. For us, in general terms, we're talking about infrastructural investments. In our region, we believe that this has been a field in the participation of the public sector is very important. We believe that it will continue to be so. I've said all this to explain the difference, but what we see is that these go hand in hand, they're parallel. I know that your study will be much more exhaustive than any other information that I might add. But listening to the other panelists, my thought is the following. One of the things that Fitch Ratings might be able to add, we as a ratings agency, our audience, our primary obligation and responsibilities is our primary responsibilities are to work for the market. Of course, we do work with issuers, but our audience is the market. So what we see here and what investors request is very clear. They want consistency, transparency, and useful information. Because within all of the GSS market bonds, there is quite a bit of information that is not useful, which is very difficult to understand. What they ask of us is this type of standardization. And I think that I believe that rating agencies can contribute here because with the credit ratings that Fitch Ratings has been performing for over 100 years, what we've tried to maintain is international comparability. A triple G bond in Bolivia will have the same risk as a triple B bond in Belgium, for example. So it's the same level of risk. What we're trying to do with all of our ESG products is exactly this. In other words, the comparability. And perhaps this might be useful. If I may, I'd like to talk about what it is that we do in this sector. And we have to always keep in mind that our audience are these investors. As Fitch Ratings, we entered the sustainability market in 2019. Our participation has been quite dynamic. Today, we offer ESG products that are devoted to risk analysis, which is our traditional product, to the assessment of risk, which is exclusively climate oriented, as well as the assessment of the ESG profile of companies and their bonds. This is a new product, but all of these products are directed to investors. They are the ones who request this type of service. How is it that we can help them to create their portfolios, taking into account the need that they have to understand where risks and opportunities lie? So we have the ESG relevant scores. This is a product of ours, and they talk about specifically credit risks. We have a credit risk which is measured by a rating, let's say triple B, for example, but within this rating, there is an environmental, social, government impact, whether positive or negative, and how it exerts its influence. How can this be reflected? And so we see this in the scale from 1 to 5 for these scores. And one says that this social governmental and climate concept is not important. That would be 1. And then we go to 5. So this is what leads to the credit decision. And those scores are assigned to about 11,000 transactions and issuers, banks, non-corporate banks, sovereign banks, but 2 more recent products. And I think that here we're talking about something that the market is requesting. In September, we launched our scores, our ESG ratings and scores. These products have nothing to do with credit issues. What they're doing is providing the ESG profile of an issuer, that title, and its trajectory. What is the trajectory? Where is it going to lead? We do this verifying the alignment of the company of the asset to the best international standards. And this is where taxonomy comes in, as Isabel mentioned.
We are always measuring against technical, environmental, and other standards that are the highest and most demanding in the world. And also, as regards the framework for the bonds, we are looking at recommendations at a higher level and measuring to see how these securities, these issuances, and businesses measures against the standard, always considering that they are international standards. So it's the same thing. And again, ESG ratings are measured from 1 to 5. 1 means an excellent ESG profile, and 5, obviously, one that is way below excellent or fragile, but also coupled with a score from 0 to 100 that affords much clarity. We think that is something of interest to investors in our view. And this is something we'll have for Latin America. These scores and the ratings are allocated by analysts. It's not AI, not machines. There are analysts. We already have a team set up in Mexico and in Brazil, and we're going to start scoring the issuances in terms of the both issuers and bonds in Latin America. And it's not just, a ticking exercise. It's actually about analyzing the economic activity of the company so as to see to what extent the business or economic activity is actually green and to what extent the practices are good, the ESG standards pursued by the business, to what extent are they accepted internationally. And the governance framework, of course, is extremely important for any investor in any sector and country. So it's basically about that, because we have talked about the development of the market through regulation. But as stated in the presentation, the one who ultimately decides and the one that will move forward is actually the investors. So they need to be convinced, they need to have the transparency and trust as to what they're purchasing and what they're investing in. So this is a bit of advertising for Fitch Ratings, but I think it also reflects the investor's perspective. Thank you very much indeed, Janine. This is very interesting, and it's super important to understand why these standards are created and what the sector criteria are. We see that climate bonds arises out of the investors' need to understand through key requirements and standards for them to understand what they're investing in, if the bond or any type of debt is truly green or not. So that's where the standards complement each other. The rating standards that you talked about, such as the ones in Fitch Rating system, so as to see what activities the funds of the debt issuances are going into. So again, that's very important, and it's very interesting to see how the study has to do with the investors, the organizations, the companies, But all of this is to offer clarity to investors. At the end of the day, that's what moves the market. The investor needs to know clearly where they will be investing, and they need to have clear standards, also to know which way the market is going. And it's also interesting to see how the market generally evolves, but also how the practices of the individual organizations involved in the market evolves, thereby affording clarity to investors and to the market. New products have been created to afford precisely this kind of clarity. And in that regard, the environmental taxonomy, and now, well, in Europe, there's going to be the social taxonomy as well, which is much more linked to the UN SDGs. So this is inspired by international best practices criteria. But we at Fitch Ratings believe in scientific taxonomies for the environmental side. And why is this so important? Because of the clarity and the measurements which are supported by scientific experts who tell you, if you do this, if you work this way, if you follow this path, you'll be able to reach this goal. It's very hard to predict the next 30 years, but we basically think we're on this path. And if we think about the need to finance this particular investment in order to reach carbon neutrality by 2050 for the planet, which the OECD estimates the world needs some $4 billion in ESG investments a year until 2050 in order to finance this. It's huge. So the very least we need is confidence that this is based on technical, correct criteria, and obviously reflecting the best possible practices. Again, no one knows what's going to happen in 30 years, but we do believe in this kind of clarity. Yes, clarity is fundamental. And you talked about the economic activity, the trajectory. So the possibility of looking at a company in terms of where they are now, what they do, and where they're headed. We see new products entering the market like SLBs, which are very much linked to KPIs, to key performance indicators reflecting the growth of businesses. So it's about comparing this and examining that in light of existing standards. Often when businesses define their trajectory and KPIs, they fail to take into account all of that scientific sort of analysis you referred to. Yes, and I think in that regard, IFRS, which is the standard setter in terms of the international financial reporting standards for financial statements, that's going to be good. A lot of organizations have been working to introduce some standardization in disclosures and measurement. But I think a truly international body like the IFRS will be able to bring its seal. This is a global thing. And I spent the whole day reading annual reports and what companies publish. And I have seen a remarkable improvement in the last 3 years. In fact, we don't yet have the exact same standards, and sometimes there's a certain KPI in 1 year and not the next year. And of course, that's one thing that the investor will not like to see, and they will say, how come one day you wrote so many tons of carbon and the next year you wrote in cubic meters and the next one in dollars? How can I compare? But I think more and more we see increasing alignment. And our teams, our analysts are always looking out for that, the measurements. What does this business publish and disclose? And what about the other business? Because investors want comparability, and ratings are just an opinion based on the relative positions. So we see a great improvement even in Latin America. There are companies that already have quite good information, and others are only just starting. And you need to start somewhere. Excellent, Janine. This is truly encouraging to know that through the reports and standards, things are improving and there's increasing clarity. And this creates this trajectory to help ensure that we stay on the path that is needed in order to truly be able to achieve our goals. So that's what we can expect in the next few years, to see an increase in the market, to see an improvement in standards. Is there anything else you'd like to add? I think that's it, Valeria. We see very strong growth, a market that will be increasingly operating under regulator scrutiny, which is a good thing. And in Latin America, significant sovereign participation and an important focus on the social side. That is important, but other panelists may have their own views. That's the way we see it from here. Thank you. Thank you very much, Janine. I would like to again call on Isabel and Eduardo coming back to the discussion to see if they'd like to add anything. Honestly, I think Janine has said it all very well. I don't have that much to add. I think we are entering a new phase in the development of these markets, and we do need to put our skates on, quote unquote. We've done it well, but we need to scale up. It won't stay as easy. But Janine has said it a lot better than I have. Just so as to wrap up, let me thank you for the invitation, and let me say that clearly there is a way to go, and that's very important. It's good news for everyone in the region that's interested in working and helping develop this market. And I think we have opportunities for collaboration, and I think that's part of our DNA. We are going to place special emphasis on these matters, working in a collaborative fashion. And of course, it's a pleasure to take part in meetings such as this one and to be able to make progress among our organizations in order to strengthen sustainable finance in the region. I would like to thank our panelists because it's been a truly interesting conversation, and we've really learned a lot. We see where we were and where we're going. So Gianleo, I would like to hand it over to you for some conclusions following this very interesting session. Thank you very much. Well, thanks everyone. It's been a great discussion, and perhaps so as to wrap up, I might highlight a few key takeaways from our conversation before we close a little earlier than planned. We see that sustainable markets are growing well. We are catching up with global growth, and even more important, we see a diversification in terms of the countries that issue and the types of issuers. We have seen in the last 2 years bonds from the Caribbean, Central America, and countries that were not on the map in the earlier years. And as our colleagues have noted, we've seen sovereign issuers jumping in. We've got Chile, social issues, social issuances, and they have really grown the size of the market in the region and raised it to interesting levels. And of course, big tickets are also interesting for investors. We have seen investors looking at green, social, and sustainable factors with growing interest. And with Eduardo, we have seen that there are three factors driving the interest of these investors, which are risk management, market demand, and regulation. And there are countries in which these factors are truly proving to be a key factor in terms of appeal to investors, especially countries with domestic and international markets that are well developed: Brazil, Mexico, Chile, Colombia, Peru. And with market growth, we've seen that transparency becomes a key factor in order to maintain investor confidence and in order to ensure that sustainable instruments yield the expected results. There's a clear need to keep high standards and independence in ESG ratings, because not all bonds meet the same green, social, or sustainable criteria. So the opinion of an independent agency, especially based on a comparable international scale, will not just be highly useful, but will also prove to be a necessity for market growth. We have seen progress in taxonomy development, and also as regards the action of regulators and issuers. We need to support issuers for them to enter the market, providing them with guidance and training, and we need to make sure that regulator standards are high, and we need to ensure that the region remains attractive to domestic and international investors, since we see a lot of movement in the EU as well. So, of course, we'd like to invite you to our coming events. We are organizing a major event for June that will focus on transparency, again, presenting some more cases related to our green bond transparency platform. We'll be presenting some results of our research and result determinants, and we'll also scrutinize our investors to look at the evolution of their preferences and to see how they select investments. So again, thank you, Isabel, Janine, Eduardo, and all those who are behind the scenes and have supported us in organizing this event. So that's it, and thank you very much. Thank you.